Hello, ladies and gentlemen. A warm welcome back to everyone to the special weekend edition of Markets Around the World. My name is K2, and as always, we'll be covering everything from the latest data and macroeconomic news stories to the key levels you need to be watching. If you love markets like we do, don't forget to subscribe and learn more about how these markets truly operate together. Last week, we saw significant volatility in the stock market, driven by a mix of economic data releases and earnings reports. The major indices fluctuated as investors reacted to the Federal Reserve's latest comments on interest rates and inflation. Tech stocks, in particular, experienced a notable decline, reflecting concerns over higher interest rates potentially affecting growth. Meanwhile, the energy sector saw gains, boosted by rising oil prices as supply concerns persisted. So, let's talk about what happened in the market this past week and the outlook moving forward. Let's dive deeper into the conversation, starting with the news. On Friday, Federal Reserve Chair Jerome Powell signaled that the time has come for lower interest rates, a shift he's been hinting at for months. This move towards the Fed's first rate cut in 4 years has investors evaluating market opportunities. Following Powell's speech at Jackson Hole, the 3 major U.S. equity indexes ended near record highs. The U.S. dollar fell to its lowest level in over a year, while U.S. bond prices surged as yields dropped. Powell's message contrasted sharply with his more cautious remarks from 2 years ago, but still carried significant weight, according to Daniel Sillick of Janus Henderson Investors. If you think your stocks have done well this year, take a look at gold. Bullion just reached a new all-time high of $2,550 an ounce, up 23% since January 1st. In comparison, the S&P 500 and Nasdaq have risen 18% over the same period. Over the past 3 years, gold has outperformed both indexes, delivering a 41% return since 2021, compared to 30% for the S&P 500 and 21% for the Nasdaq. Interestingly, despite gold's strong performance, there hasn't been a surge in private investor money into gold funds recently. This contrasts with 2020, when investors flocked to gold during the pandemic and subsequent economic uncertainties, only to sell off as prices fell in the following years. The founder and CEO of Telegram, Pavel Durov, was detained at a Paris airport on an arrest warrant for alleged money laundering, drug trafficking, and other offenses, French media reported. Durov, a dual citizen of France and Russia, was taken into custody at Paris-Le Bourget airport on Saturday evening after arriving from Azerbaijan. French investigators informed the 39-year-old that he was being placed in police custody. Americans love their Starbucks pumpkin spice lattes, but can this popular drink alone turn around the struggling coffee chain? The fall favorite is back for its 21st year, but the bigger news is that Starbucks has a new CEO, Brian Niccol, starting September 9th, a move positively received by Wall Street amid the company's recent weak performance. The pumpkin spice latte, or PSL, generates significant revenue for Starbucks, with estimates ranging from $400 million to $800 million annually. While Starbucks doesn't disclose exact sales for individual drinks, they have sold hundreds of millions of PSLs since its launch. Some Wall Street analysts suggest Target's strong quarterly results indicate that shoppers are favoring mass retailers for discretionary spending on items like clothing and home decor. This shift raises questions for specialty retailers like Nordstrom, Gap, and Abercrombie, which will start reporting their earnings this week. Also on the earnings calendar are CrowdStrike, following last month's software issues, and NVIDIA, whose upcoming results are seen as crucial amid the ongoing AI boom. Wedbush analysts called NVIDIA's earnings the most important tech earnings in years, and suggested that this week could be pivotal for the stock market, especially with the potential for a Federal Reserve interest rate cut. Let's take a look at some data I want to show you guys. We begin with For the first time, the world's top central banks are simultaneously shrinking their balance sheets. Last month, the Bank of Japan announced it would reduce its $5 trillion in bond holdings, joining the Fed, ECB, Bank of Canada, and Bank of England in withdrawing liquidity from the financial system. Historically, such liquidity withdrawals have led to market volatility. Since 2022, the Fed has cut its balance sheet by $1.8 trillion to $7.2 trillion, while the ECB has reduced its balance by $2.7 trillion to $7.1 trillion. History suggests that market volatility is here to stay. Fed rate cuts are finally on the horizon. It's been 13 months since the last rate hike, making this the second longest pause since the 1970s, just behind the 15-month gap from June 2006 to September 2007. On average, the time between a final hike and the first cut is 8 months. With a cut expected in September, this pause will reach 14 months. The fight against inflation has been a prolonged battle. U.S. households are facing difficulties, with income expectations for the next year falling to a 4-year low. Consumers now expect only a 0.8% increase in income, down sharply from 2.5% in Q1. Such a rapid drop in expectations has only occurred during the 2008 financial crisis and the 2020 pandemic. Additionally, Americans' perception of real income improvement is the lowest in over a decade, even below 2020 levels. These trends could negatively impact consumer spending. Things could get very interesting if the Fed begins cutting interest rates while inflation picks up again, potentially forcing them to overlook rising inflation due to the U.S.'s inability to afford a restrictive policy. I'm open to exploring this scenario. Let's take a look at the S&P 500 heat map and see what's happening. NVIDIA, as always, green was up by 3.85%. Eli Lilly rose by 3.32%. Microsoft, Apple, Meta, and Amazon all closed flat for the week. Let's take a look at this week's most notable earnings. Monday, PDD, Heidrick & Struggles. Tuesday, Salesforce, Box, Nordstrom, PVH Corp. Wednesday, NVIDIA, CrowdStrike, Salesforce, HP Inc., Affirm, Okta, Abercrombie & Fitch, Kohl's, Five Below, Foot Locker, Chewy. Lee Auto Thursday. Dell Technologies, Marvel Technology, MongoDB, Ulta Beauty, Lululemon, Burke Creative, Best Buy, Dollar General, American Eagle Outfitters, Gap, Ollie's Bargain Outlet, Burlington Stores, Campbell Soup Company. Friday, Jinko Solar. And these are the earnings I'm looking at. If you're interested, take a screenshot for yourself. The Fear and Greed Index is back to neutral at 53. What's next for the market? Will we shift back to fear or greed? Share your thoughts in the comments. Let's take a look at some charts, starting with the SPY 4-hour chart. There hasn't been much change. We're still within the channel. For the bulls to take control, the price needs to gap up above 565 and remain above that level. For the bears, the first step is to break the channel. Then, the price needs to close below 549 before we can consider a bearish scenario. Next chart. Let's look at the QQQ daily chart. For the bears, the key scenario to watch is if the ABC pattern starts to play out. Otherwise, if the price closes above 492, it would indicate that the gap is filled and could signal a move toward new all-time highs. We'll see what happens this week. Key events for this week. Monday, durable goods orders, PDD earnings. Tuesday, consumer confidence, Salesforce earnings. Wednesday, Fed's Waller speech, NVIDIA earnings, CrowdStrike earnings, Salesforce earnings, Abercrombie & Fitch earnings, Foot Locker earnings, Kohl's earnings. Thursday, jobless claims, Q2 GDP, pending home sales, Ulta Beauty earnings, Lululemon earnings, Best Buy earnings, Dollar General earnings, Dell Technologies earnings. Friday, core PCE inflation data, consumer sentiment. All right, ladies and gentlemen, that's all for this video. If you found it valuable, please like and subscribe. If you have any questions, drop them in the comments below, and I'll get back to you as soon as I can. Thank you for watching, and I'll see you next time. Bye for now.